Hey everyone, welcome back to Corporate Decoder. Today we're diving into some corporate paperwork that's about as exciting as watching paint dry, except instead of paint, it's a company getting bought out. Think of it as a corporate wedding, but with more lawyers and less cake. We're looking at a report filed by ICC Holdings in March of last year. This report is about ICC Holdings being acquired or bought by another company called Mutual Capital Holdings. It's like one company eating another, but in a legal and business way. The main point of this filing is to announce that the deal is done, finished, completed. ICC Holdings is now part of Mutual Capital Holdings. It's like they've officially tied the knot. A company called Mutual Capital Merger Sub, which is basically a stand-in for Mutual Capital Holdings merged into ICC Holdings. AC Holdings is the company that survives this process. So what happens to the regular people who owned stock in ICC Holdings? Well, each share of stock was converted into the right to receive $23.50. In cash, think of it as cashing in your chips at a casino. Each chip or share is now worth $23.50. Even those employees who had stock options that hadn't fully become theirs, those options immediately became fully owned and they got the same $23.50 per share minus any taxes they have to pay. It's like winning the lottery but with paperwork. If you want to read all the fine print, the actual agreement is attached to this report. It's long, complicated, and probably not a bedtime story, but it's there if you're curious. The total cost of this corporate marriage was about $73.8 million in cash. That's a lot of money. It's like buying a fleet of yachts, but instead you get a company. Now that ICC Holdings is part of another company, its stock is no longer traded on the Nasdaq Stock Exchange. It's like taking your toy off the shelf because you don't play with it anymore. Nasdaq was told on March 12, 2025 that the merger would be done soon and to remove the stock from being listed. They're also going to ask the government to deregister the stock. That means ICC Holdings won't have to file as many reports with the SEC anymore. It's like being excused from doing your homework. Because of this merger, regular stockholders of ICC Holdings no longer have the rights of being a stockholder other than the right to receive the money that was promised to them in the deal. It's like giving up your seat on a bus for a cash payment. As you might guess, there is now a change in who controls ICC Holdings. Mutual Capital Holdings is now in charge. Think of it as a new boss taking over. With the change of ownership, some people are leaving the company, specifically James Dingman, Joel Hereford, Daniel Ports, Christine Schmidt, and Mark Schwab are no longer directors of ICC Holdings. The company's official paperwork, like its articles of incorporation and bylaws, has been updated to reflect the new ownership. It's like updating your address after you move. You can see these changes attached to this filing. Looking at the information here, it appears that ICC Holdings has been successfully acquired by Mutual Capital Holdings. The shareholders got a cash payment, the stock is no longer publicly traded, and some of the leaders have moved on. Now, what does this all mean? Well, it suggests that Mutual Capital Holdings saw value in ICC Holdings and was willing to pay a premium to own it. For ICC Holdings shareholders, it was a chance to cash out and move on. A merger like this can be beneficial for both parties, or it can turn into a mess if the new owners don't know how to steer the ship. One risk is that the two companies might not work well together. It's like a bad marriage where the partners clash and can't agree on anything. Another risk is that Mutual Capital Holdings took on a lot of debt to buy ICC Holdings. This can be like maxing out your credit card to buy a new house. Overall, this merger seems like a pretty standard business transaction. The key will be how well Mutual Capital Holdings manages ICC Holdings going forward. It's now up to them to prove that this was a smart move. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate decoding.